All right. Welcome to the investing group. We have another great meeting today. And as usual, our disclaimer, nothing here is investing advice. Invest at your own risk. If you lose money based on anything we talk about, that's on you. If you make money, then we'll take credit for it. All right, so let's go around the room, introduce ourselves. Mario.
All right, good evening, everyone. I'm Mario Sanchez. Don't have a finance background. My background is in architecture and building operations, but here to intake as much information from Eric and all of you as possible. We do audio and visual record. If you cross in front of the TV, just mind your footing.
Hey everyone, I'm Victor, one of the co-founders of the investing group. Started this with Eric and John to get people together from different backgrounds to share ideas and see how we can best position ourselves to take advantage of the opportunities in the market. So thanks everyone for joining today.
Hey everybody, I am Chris, have an econ and finance background. I was in one of the original iterations of the PMT group, and I'm just here to learn and listen.
And I'm John. So I was a stockbroker, investment advisor back about 25 years ago, and then moved into a variety of other sales positions. Now I'm in real estate, and hopefully at some point we'll talk a little real estate as a way to balance around a portfolio, securities portfolio.
Hello everybody, my name is Roberto. I was sector leader at PMT, now work in the financial services industry, and looking forward to a good discussion.
Everybody, I'm John Donners. I work in government consulting for infrastructure and transportation. Here to kind of learn, see what everybody has to say, kind of round things out in the business end of things, and then also I'm a UIC business alum and also a club member.
Hi everyone, I'm Sneha. I'm currently my second year of my MBA program at UIC, also involved in PMT, and here to learn and kind of switching into the finance field, so taking in as much as I can.
Hi everyone, my name is Asel. I graduated from UIC on May. I'm currently working. Here to learn about investing, economy, anything.
Hi everyone, my name is Edward. Previously at PMT back in 2016, so a little bit ago. And yeah, just want to see where everything takes us and learn as much as I can.
Hi everyone, I'm Seamus. I'm going into my sophomore year at UIC, majoring in finance and information decision sciences, and I'm a sector leader at PMT.
Hi everyone, I'm Daniel Valentino. Background is in medical research and medical devices. Been through a couple of company exits, and most recently I've been working as a mentor at MHub to help medical device startups, and recently started working with a fintech startup as well. So I thought I would join the investment club and sort of learned what you guys are doing.
Glad you're back.
Yeah, and we need to talk about real estate because I do invest across a number of different assets, and so I'm very interested in some. I've got some real estate investments I could discuss with you as well.
I'm Alexander Valentino. I'm his son, so I'm tagging along today. I work in sales and marketing, and I've always had an interest in investing, and so I'm here to learn as much as I can.
Great. Hello everyone, my name is Mohammed. Like some of us in this room, I don't come from a traditional finance background, but I enjoy it. Been coming to Maze for a few while. By trade, I am a healthcare company founder, but I also am an aspiring attorney, so I'm going to Illinois Law this fall. So I'm excited for that. But yeah, I enjoy the discourse. I enjoy talking about stocks, and looking forward to seeing what everyone has to say.
My name is Eric Simpson. Victor and John founded this investing group. It's kind of an offshoot of PMT from UIC, which I also built up. And I trade for a living. I live and breathe this stuff. So, just doing more of the same using AI. So let's have fun with this. All right, you guys ready?
Ready.
All right. Good. All right, so we have some big news to talk about, obviously, but let's just talk about our small caps and Iran first. So this stock, CPHI, just more craziness. Some of us traded this. This is what, July 21st? China Pharma. So now I guess China biotechs are the theme in terms of trash runners. This thing opened at 86 cents. This is a sub $1 stock. Ran all the way up to $19.19. So, if you had just bought right here and sold right here, so easy, right? Yeah, gain of over 1,200%. This was one of, there were like 3,000+% movers in a row, I think, during that stretch. All Chinese. That's just how it goes. It's ever since the pattern day trading requirement has been removed at brokers, and then, brokers are turning things into a gambling house. It's just, lots of incentives to squeeze things. So yeah, this thing, okay. So this is what, 21st, and then if I go to the 22nd, I can zoom out here, it's kind of a weird chart. Okay, yeah, so this is why, they pump, and then, this, and then the thing dropped all the way back down to like $1. This was from an offering, classic dilution scam. So 2.5 million shares at $2, registered direct offering. Yes, so, they got millions of bucks from that, and they're probably gonna pay themselves and do absolutely nothing with it. The next one that was crazy, which actually ran again today, it's still ongoing, is DFNS. This is a US-based company actually, but it's Israeli adjacent. So actually, if I get out of this is still going on. This one we've traded multiple times, mainly me and Quinn, but maybe some other people have. If anyone's in the trading floor in the Discord, which is always entertaining. So yeah, okay, so they did a 1-for-125 reverse split. Usually when a stock, stock splits in theory don't really do much. Usually a forward split is a sign, it's like a positive sign. It's kind of a byproduct of a good company, and your stock price is going up and they split to make it more liquid. A reverse split is when, it's like a low price stock, and then they reverse it so they can get the price higher, because usually they're below the NASDAQ listing requirements, which is a minimum of $1 per share. Reverse splits are usually a bad sign. It's an indication of, again, dilution scam type stock. And not only do Chinese companies move a lot, Israel, this is US based, so basically Israeli, run by Israelis. Israel is known for a lot of these types of pumps too in small cap land. This is probably running on, they'll invent any reason, but of course, there's probably a theme with Israel and what's going on with Iran, defense stuff. This thing, okay, this was $3. Yeah, it ran, get a better chart on this. Okay, $3, ran all the way over multiple days, to the teens, then to the 20s, 30s, and then again, eventually to 100, 108, 3 to 108 in 3-4 days, then crashed all the way back down to 20s. Today it blasted back to about 70 at its peak, and now it's 46 after hours. So still up there, still probably going to keep messing around. We'll see.
What's the float?
Let's see, we can check that real quick.
And
it's tiny. These are all tiny float stocks.
Yeah.
When you do a reverse split, you make the float even smaller, and so it's like a coiled spring kind of thing. It's pure trading action based. So Yahoo Finance, which is usually decent for this, it's not always right. Yeah, 381,000. It's micro float. Sub 10 million is usually a micro float. 381K. This float's turning over many times a day. So the price is going to move like a rocket both ways. All right. So any questions about these before we move on?
Did you make money with that one?
Actually, yes, on DFNS, overall positive. So, yeah. All right. So let's move on to Iran. Again, we're not trying to focus on Iran, and there's so much back and forth going on. Has anyone been paying attention to the news? I know there's been some recent developments with Trump and
War's over again.
I guess,
We're still talking about Pearl Harbor, so.
yeah. Yeah, he keeps saying stuff like, oh, we love Japan except for Pearl Harbor. All right, let's see what's going on. Mohammed, you did send an article because I guess the US, now Saudi Arabia has joined the fighting.
Mhm.
That's kind of a surprise. Semi-surprise, semi-not a surprise, but I don't know to what extent, but I guess they're helping in airstrikes, right?
Yeah, I mean, they also announced a deal through which Saudi is going to be able to enrich uranium for peaceful purposes, typically.
Right.
The U.S. has given assurances that this agreement will have safeguards against nuclear proliferation. However, it doesn't really include any like your normal protocols like having UN examinations or check-ins or whatnot. It's just right now, Marco Rubio is basically telling the world, trust us with this. So I would imagine maybe that was a little quick pro quo, like, hey, we'll let you enrich your uranium for, whatever purposes that are not military, and in exchange, join us in this fight.
Right. Yeah, so the US, I put it as a separate topic, but yes, the US and the Saudis agreed to a nuclear deal, which involves uranium enrichment and also, I think, building nuclear facilities for American companies building nuclear facilities in Saudi Arabia. Yeah.
And that one didn't get finalized yet, right? Because I think that after they announced it, it still needs one more approval, and then Trump said that they need to also sign on to the Abraham Accords to receive it. And another kind of interesting asterisk to it is that the UAE actually has a different agreement from a couple decades ago, and we might see a sort of cascading effect of renegotiations because they have a clause in there where if someone else gets a better deal than them, which this is a better deal, they get to go back to the
A
table.
little bit of a bidding war, what do I call it? Also interesting to note, I didn't realize this, Kuwait shot down some Iranian drones, so Kuwait's in this. So it seems like all the Middle East, besides Iran, is joining this against Iran, or most of them. Interesting. All right, and there was a lot of back and forth about Trump. Yeah, calling off, he said he called off attacks, right? Okay, yeah, framing it as Iran's last chance for a good deal. All right, yeah, the usual, like, posturing. Okay. Even Tehran's own press is writing about the taco phenomenon. Trump always chickens out. All right. Thank you for explaining that to me, Victor. Now I know what you keep saying the taco thing. All right. Yeah, so who knows? That memorandum, yeah.
I have a segue question, if you don't mind. We're cutting deals so that American companies can build nuclear reactors, overseas, right? And yet we're not doing anything in this country. And we're so far behind the curve for energy generation in this country compared to China. China doesn't have our chips, but they've got 1,000 times the power generation in the next 10 years than we do. They won't need superior chips if they've got enough second or third tier chips. I don't understand, and does anybody have any insight as to why we would take this particular approach? Okay, so I could jump ahead and I could say, maybe it isn't that we're gonna need energy if we're in space, right? If we have space-based data centers and such. But I don't see the strategic plan here, and it's very disconcerting to me as somebody who owns stocks in AI and data centers and such. And I'm concerned about national security, right? So where's the plan for us to keep up with and maintain our supremacy? We've got the chip builders, but we don't have the power to run it. Any input?
Anyone have thoughts?
From what I've heard is that they're building satellites that are just gonna redirect, plus absorb direct energy from sunlight, but that's as close as I've seen. It's also, I think they're supposed to also keep microchips out in outer space because it has natural cooling, versus putting them inside water or essentially.
That's probably not gonna happen because there's physical limitations. Space is a vacuum, so you can only irradiate heat through infrared radiation, so it's not conduction, right? So most heat is conducted through air currents or water currents. There are no air currents or water currents in space. So that's probably not gonna happen. As to your point as to like what's the plan? I don't know. I don't think anyone in the West, but the West is never really dependent upon like concerted central planning, right? It's been more decentralized. Individual companies take an initiative, and then governments tend to support that if it looks good. So I'm not necessarily pessimistic that we don't have a centralized plan, but right now, I mean, it's interesting you let off with pharmaceuticals because China has gone from zero pharmaceutical production in 2010 to the world's leading pharmaceutical production 15 years later. So that's an example of where their centralized planning has been phenomenal, and their planning around nuclear power is also phenomenal. Right? And it's not just nuclear; they're actually the biggest developer of coal. Right? They're the only country, I think, left on the planet, maybe India, that is rapidly expanding their coal burning capacity, as well as solar, wind, and nuclear. So that's how they're getting so far ahead of us.
And Trump came up with some great initiatives to fast track the development of nuclear facility planning and such like, but man, I don't see it, and I'm concerned about it. So I think it's something we should.
There's tremendous things happening though in the small modular reactor space. It's just that which will benefit like small like communities, like city level, but it won't. It's not cost effective to like power an entire state or an entire region. You need to invest in the big, like the Vogtle reactors.
Yeah, the SMRs at scale could really be something.
Yeah, I don't think SMRs are ever going to work out to power like on the whole country. Yeah. You get much more power density out of the big reactors, but those are the ones that require tremendous government support and coordination. But we will win on the SMR front. I think we're doing well there.
I don't need to go any further, but that's something I think we should keep an eye on.
So asking Claude to go with some of those points, yeah, so China kind of has a 15-year head start. The only US company that's like prominent involving enrichment, which is publicly traded, is Centrus, which we actually had in the portfolio for a while. It did not do well for us. It was like our worst performer. So, I mean, we ended up replacing it. But that is a play, I guess. But yeah, so it does talk about the potential for SMR, which again, we have talked about. And you have some SMR stocks, yeah. It's still early, I think, but there's probably a reason why Oklo got so much funding, but again, pre-revenue. Very risky. So we'll just see. It's a wait and see thing. Another thing, I mean, this is just kind of like this isn't really, don't put too much weight in this, but I did post a YouTube link to an interview with Elon Musk and The Economist, and that was quite entertaining. And he and the reporter kind of went at it. But anyway, in the first half, before they went off the rails, in the first half, he says he believes, and again, this is Elon, so he has an agenda. He's for space-based data centers. He says he believes China takes over in the AI race at some point. That doesn't mean they hold the lead, but he thinks they pass up the US because of this energy advantage, precisely because of the energy advantage and that. And then he kind of segued into like the potential for the orbital data centers, obviously, but something to pay attention to. So this energy issue is going to be another big thing. Going back to Iran though. Actually, Victor, were you trying to say something at some point, or?
Yeah, I can just add something. Like,
okay.
I think it's interesting when you look at, like different things that are playing out. Like AI is an example. What's going on with semiconductors, and it's almost like, I mean, the LLMs aren't publicly traded, so we really don't know how those would react on like public markets. But like the further upstream you are in that play, like that's done real well. Like the people creating the equipment to actually make the chips, then the people actually making the chips, and like so on. I don't feel like that plays out well for like this like nuclear thesis, where a lot of the names that are just further upstream have just like LEU have not done well.
Yeah.
But the more kind of call them high flyers, will this technology work out? Can it be implemented and adopted on a bigger scale? Like that has all done real well, like recently in terms of like energy plays. So I'm not
any
sure.
specific ones in that department that you off the top of your head. It's okay.
I mean, like any of those SMRs, I know they're volatile,
Scale.
but yeah, I'm sure these things have done. Well, maybe not.
These
This
things
thing's got-
Not that
I think all of growth has been rocked with
Yeah.
Yeah, lately.
I'm sure it was doing fine at some point last year, though. Maybe it's just that whole
Yeah.
energy kind of trade is dead in the water. Then
SMR in particular has been that's a really painful one.
Yeah.
Because they got approval of their initial reactor design, and so their stock went way up. Then they announced that design is not the actual design that they're going to deliver because it wasn't efficient enough, right? It couldn't produce enough power. So they're going to they were in the market with a different design than the one that had actually gotten approved. But they were telling people that they were, that you could invest in us because we have the most advanced SMR design. So that, I think they recently did get approval of the second one, and they may do okay going forward. I think companies like I personally invest more like in a company like Centrus,
Right.
because they have some unique capabilities that only they're the only one in the northern hemisphere, or sorry, the North America at least, that can produce the fuel rods. So outside of them, you have to go to France, and outside of that, you have to go to China.
Yeah.
So they have an advantage.
I mean, our basis for Centrus is basically nuclear play. We didn't even dive that deep, but it was like nuclear play, and then it's rooted in some kind of valuation. Not like great, but like they're making money, and it's not like some pre-revenue thing. But actually, Daniel, I'm curious, if you had the ballpark estimate off the top of your head, SMR technology, and like how many years until you think it becomes like commercially viable? And
Well, they won't be able to install them for at least 4 to 5 years. So adoption will take even longer, right?
Yeah.
And so that's one thing. But the other thing is that their power density, the amount of power you can generate with these reactors, is, I don't know the exact number, but it's like a fourth to a tenth of the power output of like a modern nuclear power plant, like the Vogtle reactors down in Georgia or someplace. Yeah, it was Georgia. So the Chinese are building those type, like the Chinese are building the full scale nuclear power plants. That's why they're going to be able to pump out a lot more power. So
I'm waiting to hear that we have insight that the Chinese power plants are not going to be working effectively, or maybe we built in some sabotage or something.
I doubt. I think they're going to work efficiently. I think they are going to have a big advantage on the power front until the United States. Well, I mean, look what's happening. Europe is basically shut down nuclear power. They're not going to invest in nuclear power outside of maybe France. By the time they realize what a mistake that is, it's going to be really late for them.
They've already realized that Germany is suffering terribly.
Yeah, but they haven't. What I mean is, by the time they realize it and they say politically, okay, we're going to change our political stance, they're going to be so far behind they won't be able to catch up. At least in the U.S., we've got an emphasis, or at least some focus on the fact that we need alternative power like nuclear. Because in the U.S., I don't believe we're going to go back to coal. Like we'll continue to shut down coal power plants.
So Bloom, Mario, you brought that to us, I think, 6 months ago. It's doing really well, hasn't it?
Yeah, because coal is very efficient. Coal is one of the best power sources on the planet, particularly if you clean it up, if you put those scrubbers on the exhaust. But the problem is, politically, we won't be building more coal reactors going forward.
Bloom's kind of crushed it.
yeah, so, all right. So going back, I just quickly asked, are there any publicly traded Chinese nuclear stocks? And there's some stuff on the Hong Kong exchange and Shenzhen, but not like actually in the US exchange. Going back to Iran. I just want,
Eric, on that point,
Yeah.
can you invest in the operators? Right, because the utilities that provide the power in China, I think they're gonna generate a lot of power. I'm sure, they're gonna be generating a lot of profit as well as power.
I don't want to go off
Yeah.
on too much a tangent.
And
but-
I'll just
Yeah.
real quick, because I'm starting to realize I don't think I understand this energy trade at all. Because it doesn't seem like these new guys are doing well. And then I just looked up like CEG, just down 22.5% year to date. They're like traditional nuclear power plants. Like they've gotten rocked too. So
Everyone's been- yeah.
I'm not really sure where the market is pricing in the opportunity in the nuclear and nuclear adjacent space.
I think a lot of the problem with these companies, so CEG is a utility, right? They have all kinds of power plants, not just nuclear. But a lot of them it's also, their prices have been driven up by speculative investors. And then when they realize that, maybe the AI, when the whole AI trade was hit, I think they got hit worse, right? Because they realized they wouldn't be demanding as much power. I mean, there's no doubt those companies are going to do well in the long run. The only question is, what do you consider the long run? And the long run is at least 5 years. It's not, they're not going to do well next year from the AI trade or like from building SMRs.
As for the operators in China, all in the Hong Kong exchange, nothing with the US ADR. Actually, this is a good segue. Anything else on power or Iran energy?
Yeah, I mean, I think Iran's that you could probably spend a whole meeting on, because I don't know if anyone else sees a way out of this, but I don't see how the US gets out of this easily. It seems like this is gonna go on forever, where we will declare peace, then we'll have to go back to war. We'll declare peace, I know this sounds crazy, but I'm worried that this could go on for 5 to 10 years, right, and not be a 3-month issue. Which means, and all it's doing is introducing incredible volatility into the energy markets, and a lot of instability in people just are losing confidence, right? So it's really a destabilizing and source of volatility.
Well, the question is, and it's the point we keep making. In the market, it's all about like the narrative. So whether or not it's actually still a thing, the market's kind of pricing it as if it's mostly over with, as in, oil is going back down into the 70s. And then, the market's still holding up. So it's a matter, and obviously with the Trump administration, how they spin it into midterms.
Well, they just said, he came out, I don't know if that was today or yesterday, that the oil companies made way too much money off of this war, so that he's like, we have to investigate them. So, I think him and his administration are worth just going against the grain of capitalism and going straight to the source to say, we got to do whatever we need to do to stabilize prices, even if it means it's bad for your businesses. Because I assume that's the next step.
Yeah.
If they don't wrap up this war soon, they're just going to go straight to the oil
We'll see how that
companies.
plays out. But all right, we got to move on, and this is a good segue with energy and bottlenecks into the big story, which just happened in the last week, which is why a lot of growth probably got rocked extra. Leopold Aschenbrenner and situational awareness. Who knows about Leopold Aschenbrenner? Raise your hand. I've told everyone about this. Okay. Who's read the manifesto, or at least tried to? Okay. Yeah. I've also tried to force people to read it. And so he wrote this in 2024, just to rehash a bit, and he was kind of this child prodigy. Well, now I see on Twitter he was like a rising star of the German Green Party or something before he came to the States. But anyway, he went to Columbia, graduated at 19 years old, worked at the Frontier Labs at FTX when they went under. Interesting. But then, it's obviously those types of companies hoard brain talent. So then he goes to OpenAI, was one of their original crew, got fired from OpenAI for allegedly leaking some classified info, or who knows. There's always some internal drama at these Frontier Labs. Anyway, he goes and starts his own hedge fund with the backing of some like tech people in Silicon Valley, I think most notably the Stripe founders. And he, let's see, let's just ask Claude. Yeah, so he raises money for a hedge fund based on this 160-page manifesto he writes, situational awareness, talking about the future of AI, the scaling curves, the coming, the trades involving like bottlenecks, involving energy, security, et cetera. And, I think, yeah, and I've been on this, and Al have been on this like since the start, but over that, like the past 2 years, I mean, he's been killing it. Like his fund has returned something 1,000% or something. And he's kind of the, while a lot of traditional Wall Street has underperformed because they missed the whole AI trade. He nailed it. But obviously, if you looked at his portfolio, I mean, some of these things.
Was it really speculative?
Very speculative. And we have a decent number of those holdings too, but not like to the degree or, but it turns out he was using 4 times leverage.
Oh.
And he did have some puts, okay, he had some calls. Whatever hedges he had though, it didn't offset what he lost. I think he was even shorting software, which I don't know if that was,
Those aren't his holdings, are they? Are those his holdings?
yes.
They're not as speculative as I would have thought.
Well,
Those is public funds.
there's his,
How much of, didn't he own like a big chunk of Nebius?
he had a lot of Nebius.
And
I think Bloom Energy at one point was his largest position.
Yeah, it's tough.
And then Bloom Energy got destroyed in recent weeks because of the short reports. The whole scandium shortage, or the scandium issue, if they source their scandium from China, et cetera. All right, so yeah, lots of Nebius. It was like almost 15% of his portfolio. He did have puts, okay, on the Van Eck Semis index on NVIDIA org. So he had some puts on like larger, like mega cap AI infrastructure names, but it didn't really offset whatever he had net long. Looks like his Bloom decrease. Okay, yeah, it was almost 16%, and it went down to 5%. I mean, again, these are kind of delayed reporting, and now obviously what's come out is that, so he ran this thing up on leverage to, I think he started with like it's like something 100 million. We'll fact check it, but then he ran this thing up to like 40 billion on leverage. And what happened was AI stocks in recent weeks have, just like they did kind of last fall into the early spring, they took a nosedive because there's just lots of uncertainty about, again, the build outs and what the value add is. And I don't think the market wants to reward it that quickly. And then, recent news about like, the Stargate data center delays involving Oracle, Bloom Energy, et cetera. So, just lots of uncertainty. And so the AI trade, even though, yes, it's been very bullish the past few years, it just, the drawdowns are so huge. So if you're on leverage, if you're on 4x leverage, it's like a 20% drawdown in AI, which with these names, just any small drawdown in the market, these AI stocks are just going to get smashed. Like that's going to take you out. And so I guess what happened was that, the implosion. So, okay. Yeah, and he was 23 when he launched the fund. That was also crazy. He's a kid, no experience, et cetera. Well, for a while, he's proven people wrong, but again, on crazy leverage. Everything tanked. Okay. He had like a 70-something% drawdown, I think. And then software shorts like Adobe rallied. So it's like the shorts were getting killed too, apparently. And so here's what happens. This is interesting. And again, I'm not big on conspiracy theories, but we'll see what people think about this. So on July 24th, he sends a letter, disclosing heavy losses, and I think he's trying to raise capital, like emergency, capital injection, right? Well, here's the thing. people are going to, and that's going to get circulated, like in circles with lots of capital available. And you know, what's funny is that I think a few days later, I think it was a day before the last Fed meeting, you know, because the whole Fed meeting was like a decent chance, oh, they might raise rates, you know. And Ken Griffin, the Citadel CEO, he's doing the interview rounds. And again, this is why you don't pay attention to what they say. I mean, you do pay, but you don't follow what they say. There's an agenda, or there's something, they always have an agenda when they're talking. He basically starts fear-mongering about rate hikes. Like, he just fear-mongers, and, you know, he keeps a straight face with his psychotic eyes and all that. But everyone knows that, yeah. And I mean, I mean, that's just, you know, that's very clever, whether he was intentionally doing it or not. I mean, there's a lot of speculation around how involved was Citadel in the whole GameStop, Robinhood stuff in 2021. So anyway, he fearmongers. I think that spooks the AI infrastructure stocks even more, because I know they were tanking really hard going into that. And then you look at IREN, which is one of our favorites. It's been, yeah, it's been really hit hard. I think it even went, it went down into the 30s, and then everything kind of cascaded. There was such, like, they had the decision. They didn't raise rates. It was a 9-3 vote. We can get into that later. But then, you know, all these infrastructure stocks tanked even further than you would have thought. IREN even touched like in the 20s at one point. It's pretty crazy. And so at that point, I remember seeing this. I was like, someone's getting liquidated. Something's going on here. So turns out it was Leopold selling the bottom, being forced to sell the bottom because he got margin called. Yeah. So I guess Goldman or Morgan Stanley, oh yeah, at least Goldman, they were his prime brokers or something, but he gets margin called, 45 billion at the peak. They tanked to 10 billion. He has to sell his entire public portfolio and in like a block transaction. And there's like a couple bidders. Citadel ends up getting it for a discount too. So, you know, who gets to realize the whole Aschenbrenner thesis from the Aschenbrenner fund? It's Citadel, I guess. So smart by Ken Griffin, regardless. And I guess what's left is, 5 billion in Anthropic. So now he is just essentially a private investment firm, essentially a VC fund now. And he's seeking capital again. Okay. Yeah, first they said, oh, they sold half the Anthropic stake. Turns out they didn't sell any, but still, I mean, they basically got margin called and got squeezed out of all their public holdings. And so that whole manifesto, you know, he's not going to realize it with the public stocks, at least. Who has thoughts on this whole thing? I know people got thoughts on this. Please talk.
I think it was a good learning lesson for Aschenbrenner.
Yeah.
I mean, he's not a finance major. He didn't study finance. He just knows what's going on within the industry. He was
Right.
in OpenAI in Columbia. He was a smart guy, but you know, it's just a good learning experience. I think he's going to continue to be a great investor. It just takes time, and obviously, there's a lot of learning experiences for us as well. You know, when we over leverage, especially, you know, I think. Just in terms of Citadel, just going directly towards this, I think there was a lot of movie scenes that we didn't watch that Citadel, the Ken Griffin had within Aschenbrenner's, and just looking at Citadel, just looking at the Korean leverage market and saying, we're going to leverage, we're just going to margin call every single Koreans out there. Like, and they know, and they are able to make those headlines and also margin call all of them. So I think this was a great move by Citadel, Ken Griffin.
Yeah, I mean, it certainly, and again, that's another interesting factor. And I didn't really put it on the topics list because we did talk about it before, but pretty much all of Korean retail, like everyone in Korea was just buying stocks indiscriminately, especially all the AI bottleneck stuff. And they probably exacerbated all this too. And then a lot of them got forced out. I think I saw, I don't know if you saw this, Brian, but it was like 3% of all Koreans got margin call liquidated. Yeah. That's insane. Like, it's just, I don't know. So like all this happening at once, it's just, again, it's a liquidity thing. And so that's why the stock market's so crazy, because you can be right about the thesis. And honestly, like my opinion, I still believe in the thesis. I still believe in the thesis long term. Nothing has changed about like the scaling curves or any of that. Everything's going in the time frame. It's just, if you're betting on a stock, you're going to be subject to all kinds of crazy whipsaws, emotional whipsaws, and who knows what. Just on the market can remain, like they say, it's irrational longer than you can stay solvent. The market does stupid things. It'll just jump either way on any crazy news for whatever reason. And then, if you are publicly essentially sending out an emergency SOS message and he's trying to raise capital, well, it's like, I think they alluded to this. I was watching the whole Skrelly talking about this because somehow he was able to break this news, but it's like it's like these other hedge funds will see this and they'll trade against you. I want this, Yeah, so it's like there's a whole other kind of game going on when you deal in public markets, And it's just a different animal than in private markets. And so I think, like you mentioned, it could just be lack of experience. I looked at they have 8 employees on staff. No one really has a background in portfolio management except for one guy who apparently came from like FTX.
He was sick that day.
some fund that blew up too. They didn't really have a seasoned risk manager person. So yeah, it's just, sometimes, actually most of the time, boring wins. It's like you can be an AI believer. Like with our portfolio, we believe in the AI trade. It's just not going to do 4 times leverage or anything. And so I think, it's a learning lesson. He still walks away from this probably a billionaire, close to it. I mean, it doesn't matter with whatever fees they've collected for him. Obviously, reputation-wise, I think it's taken a hit, especially among potential investors in for him in like a public market fund. But I don't think he's going to have any problem raising more money, especially for if he segues into the whole venture capital angle, which I think is inevitable. Honestly, yeah, and what's funny, Peter Thiel, who we also talk about a lot. Peter Thiel had a public fund that blew up in 2009. It was hedged, and then I think he got destroyed on the rebound from the financial crisis. People don't mention that very much. And then he kind of like reloaded everything by going all in Palantir while it was private. So here's Leopold kind of doing the same, going in Anthropic, which his now wife is chief of staff of, so there's some insider connection there. But I think, in the private markets, he's fine. He'll probably raise money again. But yeah, it's just a crazy, crazy story all around. Mario, did you want to say something?
Yeah, I think because I made a reference to billions in the Discord, I think it's a great case of just like when you come in as an outsider and even with a really compelling thesis that works, then immediately the sharks are watching you. And I mean, it's not like it's not really even a conspiracy or what Citadel did. There's nothing illegal about it. They saw an opportunity.
Yeah. They
used their presence in TV and the markets to just squeeze a little bit and see what would happen. And then what happened is they get to pick up a book at an awesome discount, and the money stays with the elite old timey guard. And I think that's just the risk you run, being an outsider, having different ideas,
right,
in such a standardized world.
Yeah, I mean, public market valuations, and again, they don't move like in the private markets. Private markets, you get a smooth ladder upwards just with subsequent funding rounds and all of that. It's very illiquid, and it's very just. So that's why I think there's a lot of opportunity in private markets going forward, especially with a lot of the AI inference stuff. But it's just a different game. It doesn't behave the same way, and so you got to just manage your risk. That's the main thing. So.
I mean, I don't know what Aschenbrenner, I don't really know too much about him or what he was trying to accomplish, but it sounds like he went all in on the AI bet, didn't really think at all about diversification or managing his risk. I don't think you see the Ken Griffins or the Ray Dalios taking that approach.
Right.
They do manage their risk better, and I think they're smart enough and experienced enough to know that even if you're right in the long term, you could easily be killed in the short term.
Yeah.
Right? And that's exactly what happened to him. That Aschenbrenner.
There's a reason why. I mean, and I saw this interesting thing on Twitter X where someone was like, I honestly feel like someone's peak as an investor is like between the ages of 50 and 70, just because they go through blow ups or getting like you have to go through it kind of, no matter what size you are. Like, and so, yeah, and I think there's another interview, I think David Senra, who has a really good podcast, the Founders Podcast, but he was reposting something where I guess it was a Ken Griffin interview, but Ken Griffin said, like the things that blows people up, and I think he mentioned, leverage and high concentration. It's like I do believe in kind of concentrating your eggs towards a basket or a few baskets, but like you don't want to be over concentrated in one basket, because markets, a theme will just come and go. It'll be in favor and be out of favor. We already have seen it with AI multiple times now. Like the last AI dip from last year into the spring, like that was like already severe enough where it's like, you know what, we, at least for the TIG portfolios, like we need to get some hedging here. Got the ore thing going and kind of didn't want to over allocate too much into it because like, this is just going to be a theme going forward, high volatility. We might have, with AI, higher GDP growth acceleration, but the volatility is going to be insane too. It's just an unusual environment we're heading into. And so I think a lot of funds going forward are going to have to think about their positioning. I think even, hedging is going to get more important than ever, even though historically the cost of hedging has been a little too high to be worth it. Now with all the volatility, I think, long, short, or having some kind of hedge, not like with Aschenbrenner, he had hedges, but apparently it didn't do much. So that's going to be kind of the thing going forward. So, I feel like, again, there's lots of opinions circulating publicly, lots of like, I told you so, lots of people defending him too. I don't think it makes sense to have an emotional attachment either way. It's just a thing that happened. And, rumor was there were several other funds that were in danger like this. Because I think they're obviously with the influence he had with this whole manifesto, like there's funds that just piled in, like, copycat trading everything he went into. I'm sure a lot of us were copycat trading, not whether knowingly or not, but I know a lot of you in the Discord have talked about his portfolio holdings or whatever. So that's something. But anyway, really good write-up though, in my opinion. So if you haven't read it, or if you want to read, just read through it. Again, it doesn't invalidate the thesis. It's just, it's just a different ballgame. That's all.
I agree with you.
Yeah.
The thesis is still sound.
Yeah.
But what you have there in summary is somebody who was inexperienced in portfolio management, didn't know how to mitigate risk. It reminds me of back in 98, 99, you could have thrown a dart at a wall full of stocks and made money.
Yeah.
There's a time when everything is going up, and he was in at the right time. He had the right insight, right?
Yes.
He's got an insight with his wife as well, kind of know what's coming in the pipeline. But if you can't, the best money managers over time, the best performing ones are control the downside. Because when things are going up, if you're well positioned, everybody's going to benefit. But if you're over leveraged, the margin thing was ridiculous. And I think once you get into that trap, you can't back out.
Yeah.
Because to cover your margin, you've got to sell or raise more money. And, he was stuck.
Yeah.
His whole reputation was on the line, or maybe his pride and his immaturity kind of got in the way.
Funny story, kind of related to that, and this is not a fun, but like at the business level, in that .com boom, Amazon, they were kind of getting on the map, but I think, did some kind of huge, they did a capital raise, like right before March 2000, which is when that bubble popped. And they kind of knew it was, bubbly, and they got it out of the way, but it was like, I don't even know if it was Jeff Bezos who, I think it was like his CFO or one of his financial people who like urged him to do it. And they did it. And then weeks later, the bubble pops. They still dropped 95%, but they survived because they did that raise just in time. But it's like just a few weeks difference, and they would have been destroyed. It's like football. It's like a game of inches or whatever you want to call it. It's like the difference between being a zero and a hero, or just being like laughing. It's like, it's not that big. And I'm sure there are plenty of other actual good companies back then that just failed because of timing and luck and who knows what.
Important to point out too that even with his July drawdown, I think he's still like 80% up for the year. So
I think there is some debate on whether that's like how they marked Anthropic, or whether it's the, I don't
think Ashenbrenner is still up? Or what do you mean?
His book, yeah. Even with like the 60% drawdown or whatever, I heard reports. Let's see what Claude says. He was still like 80% year to date.
Oh wow.
Yeah, he's still up 80% year to date. Like he gave like public paper online to his investors. So I said that some of the they're gonna release it soon, but it's 80% year to date, and they're still gonna be like a hybrid fund, somewhat public, somewhat private, as they were before.
Interesting.
And they still have the Anthropic thing. That's
so what's the controversy then? If he's up that much for the year, it doesn't seem like that controversial. I mean, I realize you could have been up a lot more, but
they just came.
It's just that I think in the fund world, taking a drawdown of like 70-something% is usually just unacceptable. That's the whole thing, and also just who knows if the partners in the fund actually are up after all this. There's a lot of, again, they're still hashing this out, but let me just see what Claude says here. Okay, yes, the best available number, he's still up roughly 80% year to date. The fact check, okay. Yes, dropped 67% during July. Okay, well, it was total liquidation, I think.
We talk about greedy investors. That would be pretty greedy investors, right? If you think about it. they
have this your last. This is just teaching me, you know what, just be 4x levered. I'd say it's still up 8%. I've learned nothing from this.
Well, I noticed Eric Zaba, who lives in San Francisco, posted in the Discord last night. He said, word in the grapevine, and again, rumor, whatever, is that none of the investors want to leave.
Yeah.
I wouldn't want to leave. I would want to stay in it, Like, I'd be like, yeah, man, I believe in your thing. I'm still drinking the Kool-Aid here. I would prefer, I think maybe it's a hybrid thing, but I would prefer he just, he can just go the private investing route and kill it. He can just invest in anything. It doesn't even have to be a good company. It's going to be hot potato in valuation just because of his pull, because it's like, oh, Ashenbrenner's in it. Okay. All the other VCs pile in and just send that thing up. Right. It doesn't even matter. That's how much influence he has at this point. Okay. He's still crushing it, glosses over. Okay, yeah. So I guess, he's up 80% for the year.
Right. Frank, this is much better than like the Cathie Wood situation from Mark a few years ago, right? They lost 50%.
Right. He's still up. He's making money.
So yeah.
And he's married now.
Yeah.
It's been a good year.
So he could still lose half his stuff.
There's something that's off in there, that equation, that 80%, because he lost assets. He lost significant assets. So it's kind of like owning a company. You got a franchise, you've got 100 locations. You're making money, but then all of a sudden, now you've got 25 locations. So he had loss, and his investors had all that loss. I don't know how the 80% equates that they're still up.
Yeah, that's why.
It depends on
it's
who, when they.
surprising, but it
Yeah.
has to be.
Yeah, like
those
investors
assets-
that got in at the end of June would have been absolutely destroyed.
Right.
Yeah, so those people probably aren't very happy.
I think there's.
And then you also look, I don't know what the specific rules on like withdrawals are for this fund. But like if you have people who the minute this thing starts going down, they're like, I want my money back. Right? If you don't have rules in place to keep that from happening, you can get into like a liquidity crunch real quick.
So the thing I'm curious about is what do people think about companies like Envis and CoreWeave at this point, or an IREN for that matter? What are your thoughts? I mean, it seems like it might be a good entry point.
Yeah, I mean, it's one of those things where usually what happens after a liquidation event is, a lot of what suppressed them, like the market likes to overshoot. And I think it did overshoot on a lot of these infrastructure names. And because of this Ashenbrenner liquidation, usually what happens after that, now it's the green light, it's on. And so it's not I think a lot of people think that. And again, we got to be cautious, but again, usually post some massive liquidation event like this, that's kind of like when the bottom falls out. It's like the whole, yeah. So I would say, I mean, I've been bullish on these things anyway, but now it's if you want to buy more, I think in terms of our exposure, I think we're good. But if people want to buy more, if people want to buy Nebius or IREN or CoreWeave or anything like this, I don't think it's a bad time, but we'll see how things play out. I think market's still kind of in wait and see mode with what's the value out of here. But yeah, I think if you're positioned for the next several years with these neoclouds and with other AI infrastructure stuff, like you're fine. Even Bloom Energy, like I saw, again, kind of following, but Chris Camillo apparently loaded up on Amazon and Bloom Energy on leverage and seemed to withstand it, according to him. So who knows? But yeah, so after all the bad news and all this stuff happens, that's usually okay. Sentiment has kind of bottomed.
Yeah.
So
what's the lesson for the retail investor from this?
The lesson is manage your risk and don't go on leverage.
I was going to ask about that actually.
Yeah.
So like if you were in charge of the fund at that point, when it was up, what would you have been able to do to prevent this kind of liquidation? What did he miss protection wise?
I don't know if he missed much. It's just he was on Forex leverage on a bunch of crazy growth tech stocks. Like you're basically guaranteed to. It's just
like listen to a song called "The Gambler." It's essentially.
I think
it's gonna blow up if you're.
A good example would be like if you've seen The Big Short.
Yeah.
Right. I don't know how dramatized that is to how he might have, like Michael Burry, experienced it in real life. But at one point, he's adamant that he's correct, but his fund is just bleeding money, right? So it's kind of like what Eric was saying earlier, where it's, you're right over what period of time, right? And over what period of time are your investors willing to stand behind you and say, yeah, we believe you, like you're right. And so like if you're someone that got into the fund later and you just lost 70% of the money you put in, you're probably like, I have no faith in this person. Like I'm not gonna put more money in. So it's all perspective.
I think it's just interesting because the way he's running this fund up until now, but still the way he's running this fund is just different than how funds have traditionally been run, Usually they've been way more risk averse, way more about capital preservation, not even beating the market necessarily. He's just treating this as like, and again, I don't think it's not like dumb as in like his picks. It's just he kind of probably saw it as like, hey, based on the scaling curves, long term, if you buy, say, Nebius at this value, it could be like 100 or 200 bagger, a few years down the line, and it very well could be something. But if that's the case, then why go on Forex leverage? So that's just a risk.
I want to add to Victor's point too. Just because of the state of the world we live in, where essentially we can find instant gratification like at our fingertips. And I think that in a world like where Michael Burry and The Big Short and that movie takes place, was far easier to digest losses, even though it got to like almost a breaking point. Whereas today, you can go on Twitter and just see a guy who's like shit posting or whatever that, oh, I made 1,000% on some small cap today. And when you pair that up against trying to believe on someone's thesis, as compelling as it is, you may not have that full commit that you do or you used to. Yeah.
He wasn't the only one. I mean, there's, I know Brian has kind of been dialed into this with one of the picks, but Serenity, Serenity, who's seen Serenity on Twitter? It's like this anime girl, except it's a guy. Don't ask. I don't know the specifics of this, but somehow this Serenity has like 1 million followers and has been like killing it with these AI bottlenecks, basically doing similar things as Aschenbrenner. Although Serenity apparently took like a 50% drawdown in 2 weeks, last report. So again, there's just lots of memes about that. But like, yeah, this is why I don't know. Again, we're not dealing with a normal environment either. And it could very well be like this for the next decade or two or something. That's why I'm like, look, I don't know, but I think the best you can do is not go on crazy leverage and just hedge your risk, Like
he was trying,
but he was hedging it with like other semiconductor stocks and other tech stocks. Like, I don't know. And so again, it's like, there's a lot of, I don't know, hindsight's 20/20, but it's just one of those things. He was on big leverage on crazy high beta stocks that are going to move at multiples of the market with any little market move. Like, what do you expect? Like, what's going to happen? Well, this is inevitable if that's the case. I thought, and again, it seems like his puts didn't really do much to help. So, I guess.
Do we know if he was leveraged all this time or just recently?
We can ask.
I personally think he was probably leveraged most of the time. But the reason why I think that he was 4 times leveraged was because that he believed this thesis so much to the fact that they're gonna. It's like a once in a lifetime opportunity. If you read the situational awareness, like 185 page. I read it in 2 days and it was like the most interesting pages I've ever seen. And it's like too quick. But if you read it, it's understandable. His thesis, like the orders of magnitude, when he talks about these scaling laws, it just makes sense. Like, and if you're married to a chief of staff for the OpenAI, like you definitely know a lot of insider information. I think he was just too married to the trade, but obviously he didn't understand the risk. He was not a finance guy. There were not a lot of finance people who were kind of doing that. I mean, he was shorting and giving out puts. But I think it was a learning lesson from him, I think. So in terms of, I think AI trades, we've been seeing a lot of growth, but I think this was a great deleveraging event, just for a lot of investors to learn. I think is.
All right, so the best estimate, leverage climbed steadily from 1.5x at launch to about 4x at the end, averaging about 2 to 2.5 gross NAV over the fund's 19-month life. Only reported figure directly is at the end. I don't know why.
That is
why?
very odd.
Like, why would they do that?
Yeah, you'd think you'd want to do the opposite. When you get the 40 billion, you turn off the leveraging.
Yeah.
But maybe human psychology, he was on a generational run, one of the best performance in history.
No one's
didn't blow up.
Yeah, like you guys know about the long-term capital management. Like that was another famous blow up and they had like Nobel Prize winners as partners. They had all these advanced PhDs, everyone with every credential you could imagine. They were like academic stars in everything. And I think some of them even invented Black-Scholes, which is a lot of option pricing models are based on. Like this thing blew up on leverage, because it was hubris. Like it's just, that's something I think in markets. Yeah, you got to be smart, but you also have to have some degree of emotional control too. Yeah. Which is very difficult. So there's just a lot of things that goes into it at all levels. So even the smartest people in the world supposedly are not immune. You know, so that's just another lesson.
So when it comes to hedging, because he hedged like on software, right, which he thought would be like the opposite, like AI would eventually phase out software. So then is it smarter to hedge in the same industry that you feel confident in?
I think you can if you believe, and it sounds like he was trying to do it. Like if you look at his holdings, if you go back to this. Okay, so, and again, who knows the real allocations for everything, but okay, he had puts. So this is not the actual value. It's like times 100 shares, whatever, nominal value. These are like mega caps in AI infrastructure, right? NVIDIA, Oracle, I mean, you look at the market caps on these things, right? NVIDIA is the largest company in the world, I think, and that's 5 trillion. Oracle is also huge. That's 400 billion. And okay, but then the things he's long, Bloom, Nebius. Okay, so go back to Nebius, 50 billion. So it's like, 1/100th the size of NVIDIA, roughly, right? So he's kind of playing a small size, in theory, yeah, I guess it makes sense. Like smaller AI infrastructure stock has more run potential, and then you can offset it by shorting or betting against like a larger AI infrastructure name within the same thing. But I mean, what happens when they go down? Well, these small things move. Again, we've talked about beta before, and I'm not a huge fan of all the finance terminology crap, but beta is a good rule of thumb in that you have a high beta stock, like a beta of 3, it's going to move 3 times whatever the market moves at, roughly. And so, Nebius is just a high beta stock relative to NVIDIA. So when things go down, Nebius could crash like 20%. NVIDIA could go down like 3-4%, and so, and again, he had puts.
He also owned like double percentage of the whole market cap of the whole stock.
Of which one? Well, he has, so he had 2.4 billion, I think, in Nebius. And so that was what percentage of, it's like almost 5-ish something percent, to go by that. So
Wow.
Of the company. Yeah. So like, again, if you get trapped, like if you're trying to sell, there has to be buyers. And so if you're already like 5% of the company, then there's a liquidation event, and it's hard to find the buyers, and that's why they had to do a special deal with Citadel to, of course, Citadel gets a discount, So yeah, Mario, did you want to?
Yeah, a follow-up question. How is this type of like being levered different than another fund that we track, which is OR? And how is that more successful or a smarter version?
Yeah. So again, leverage by itself, like I say leverage, it doesn't mean it's just bad. Like, okay, so the OR fund, there's ways to use it. So apparently whatever Aschenbrenner was doing on his Forex leverage was just straight up levering beta, like even further. Or at least, for as crazy as he is, I think, he has some crazy rants on Twitter or whatever. But his portfolio construction, though, it's pretty sensible. So he's, again, the ETF's a little different than the hedge fund, but OR is, I think it's 250% long. So it's 2.5x long and 1.5x short. So it's the balance between shorts and longs. It's more even, not that even, but it's still long tilted. Another thing that's different about OR is that he's not concentrated. He spreads it out over hundreds of positions on each side. Aschenbrenner's just doing it on like 10, 20 positions, I don't know. But they're all heavily correlated in the same thing. And OR is just doing it across like every industry, So he even has like, Japanese deep value stocks. He has shorts on telecom. he has oil and gas, some AI stuff. So it's just like spread out through everything. So it's a smarter way to use leverage. I mean, I can dive into it more. So yeah, I mean, if you run a long short book and it's not concentrated and you have a lot of positions on each side spread out, and you pull out your risk, I think that's a sensible way of doing it. That's really the only way you should be using that kind of leverage. But if you're just concentrated on one side mainly, and especially on like net high beta like Aschenbrenner was, well, it's only a matter of time. One reasonable drawdown doesn't even have to be a true market crash. It can just be like a regular correction in the thing that you're concentrated in, and that takes you out. So, yeah. And again, I didn't realize because I figured he'd probably be fine, but again, now that we know he was 4x levered, then that just changed. It's like, okay, well, I don't know. Like, I guess they should have had some. This is why I guess, for a fund, it's like you can have a thesis, but you should probably also like hire people who kind of go against your grain, like go against the grain. Like they kind of, for your portfolio managers, they should actually kind of like be contrarian to what you believe in, and more risk averse. Like you kind of need that. Or for example, okay, yeah, counterexample. Oh, Claude says it's the perfect counterexample. Well, what do you know? All right, both run leverage books, but use leverage for opposite purposes. One uses it to reduce market exposure, other uses to multiply it. Yeah, or runs 250%. Yeah. Oh, okay, it's 150% long, 100% short. So not even as much leverage as I thought. Yes, it's 2.5x levered, but 1.5x long, 1x short. Okay, and then that's 50% net long, which kind of goes with the market being up 2/3 of the time, et cetera. Through OR's underlying hedge fund. Okay, though OR's underlying hedge fund is generally operated closer to 200% long. Okay, so yeah, roughly in that ballpark. Okay. Yeah, lower correlation and beta to the market, despite being levered. He exploits two anomalies: less volatile stocks of higher returns, small stocks of higher returns, current top holdings. Okay, he does have Taiwan semi, some Japanese stuff, Energy Transfer, which is a gas. Okay, 21% cash. He keeps a decent cash position too. Interesting. Largest short positions are actually index ETFs. So he actually shorts just the whole QQQ, the NASDAQ, and the Russell. So he's not even really picking as many individual shorts as I thought. But still, if you think about it, if you short the index with them, that's like shorting something 100 stocks at once. And then some individual names. Okay, he dives into it. Yeah. I mean, Aschenbrenner was short something. I don't think Aschenbrenner was like a NVIDIA bear though, obviously, or like an Oracle bear. Like, yeah, okay.
So why was he betting against them?
I don't know. That's
portfolio.
I think more needs to come out about that. But I thought before all this stuff came out that he was just playing the high beta stuff in AI infrastructure, and then sort of short it as protection with puts the lower beta stuff, but that's still AI infrastructure in the same department, which makes sense logically. But maybe the strikes he picked on the puts were just not going to do the trick. So again, only they know internally how it went down. But like, whatever it wasn't enough to protect that public portfolio from getting nuked.
Well, also, like you're only able to see just the quarter runs. We're not able to see when they bought it or when they sold it.
Right.
I think a lot of March and April drill downs could have been coming to a point.
Yeah. So.
Managing their portfolio.
Good point. Yeah. So with these 13 hours, again, we only have so much publicly available information. These are just quarterly, and these are like delayed. Usually, it's like sometime after where these actually officially come out. So a lot of times these reports come out, and the fund might not even be in these positions, or might have changed a lot. So there's only so much you can really put in this in terms of just how much you want to weight this and information. So yeah, we don't know only Aschenbrenner and the people in this fund, and then maybe Citadel or whoever's directly involved and also the prime brokers. Only they know exactly what the whole deal was.
Could you pull up the Micron price chart on FinViz for the last 3 months? I want to venture to guess what might have happened, and I want to see what other people think. Click the calendar back.
Where is it?
By the monthly.
Oh, this thing. Okay.
Yeah. Do 3 months.
Sorry. 3 months.
All right. And then click the. Oh, it's on daily, right?
Okay.
So you see the top where it goes to like 1200.
Mm-hmm.
That was like the absolute AI mania. That's probably where he was up 429%. And
This is Micron. Did he have Okay, he had a
yeah,
put.
Micron. I'm using Micron as like an example for like because all these stocks are kind
And he had
of
a
highly
call.
correlated at this point.
Yeah.
What I'm thinking happened is if you go back to that stock
He had a
chart,
straddle. Okay, yeah.
it went down. It drew down to like about $829 there.
Who's back?
The
Yes.
last dip before the most recent one.
I promise.
So it's like a
This is yours? No,
It drew down to
30-ish% drawdown.
It like went down, 33%, not that dip, but the dip right before it.
Which
No, not the candlestick, that dip right there.
Yeah.
That felt like, I mean, this might be reading TVs and like horoscope adjacent, but like I've just been like watching, my portfolio is 90% AI and AI adjacent and all this sort of stuff, and I've just been watching it. It's like last 3 times there's been a major drawdown. It's drew down like 30%, 30 to 40%, and it's gone right back up after that. And I don't know, maybe Aschenbrenner was looking at this, maybe he wasn't. Maybe he was at like 2.5, 3x leverage on that because he was like, oh,
I think he pressed harder on that.
yeah, because right before his fund got liquidated, he was telling all of investors, hey, this is a really good opportunity to give us more and more and more money. Like, this is the time.
Yeah.
And then he thinks like it's going to go back up because it's just been this repeating pattern for the last 3 times. But then Citadel comes in and fear mongers and everything like that, and it draws down even further when he's over leveraged, and that just wipes him out. That's what I think possibly could have happened, since we don't actually know what directly happened. I feel like that could have happened. If anybody else has portfolios that they've been
What
watching.
day was the last Fed meeting? Okay, I mean, that's a lot of, it's a lot of speculation, and I don't know. What we know is, and again, this is just a rough estimate from Claude, so again, we know that the leverage ratio probably just increased over the last, it did increase from 2 or 1.5 to like 4x over the last 19 months. We don't know when exactly that happened. It could have been at any point in like all of this. If that were the case, like if he was, I mean, and again, we don't know this. So again, we can't apply much weight to it, but if you're pressing leverage on any of those dips, I mean, that's pretty ridiculous. But yeah, especially the drawdown's not that crazy, but okay, so I just want to go to this. Okay. Or actually, we can use Micron as an example, although it seems like he had a straddle position on it, at least from the last filing, like a call and a put, roughly the same share amounts. Again, we don't know what to derive from that to what strikes he was using. And we can go down a million other rabbit holes when it comes to options. I don't want to segue too much. Okay, so on the 24th, okay. All right, so the 24th, okay, so we know here he was trying to raise more money. Maybe we use Bloom Energy, because I know Bloom's been taking it on the chin. That had to have been, yeah. I think Bloom was like a big, Bloom getting hit hard. And I remember prompting about Bloom because there's a whole, we could talk about it later, but there's a guy who even has like a whole, he went on Invest Like the Best, that podcast I do listen to. He had a whole thesis about natural gas and how there's going to be a big shortage by 2028, et cetera, kind of fear mongering. But then he said Bloom Energy is going to take an extra hit from all this. And then at the same time, you had 2 different short report type things bashing Bloom Energy on their scandium thesis. And so it's just been hit so hard. And so on the 24th, this thing tanks, from what, 214 down to 180 something. So it took a big hit, sub 200. That's when Aschenbrenner sent out that memo trying to raise more money. And he even said, I think this is a great opportunity to buy, which makes sense, right? So I think it was Bloom that did a lot of damage. And then, okay, then what happens? So the Fed meeting, okay, Wednesday the 29th. Okay, yeah, so that was this. So right here, and then I think Ken Griffin was talking somewhere over here, maybe right here, and then he just sends it down a bit more. Let's see if Claude when did Ken Griffin give his rate fear-mongering? Let's see if it stays fair and balanced with my, yeah.
6%.
May. That thing says it was the milk one May. What's the July 29th? Okay, did he? I'm pretty sure on X, someone was saying he did one like a few days.
It was a Citadel, not Ken Griffin.
It was Citadel?
It was like 2 days before that meeting.
Okay.
Happened.
Either way, I mean, Citadel is Ken Griffin.
I don't know anything about him. I've heard his name.
Citadel. Okay. Did anything come from Citadel? Was it a report from Citadel?
I think there was a lot of reports that were coming out. Citadel is expecting the Fed to hike the rates.
Okay.
Yeah, you're right.
I think it was like 2 days or 3 days before, or maybe a day before. But I think, going off of what Al said, these market makers have so much data to the point that they know what is happening to the markets, how many people are leveraging into the markets, and also they control the media. We've seen it. Like if you see a lot of Twitter and also a lot of social medias, that you can literally see the bots controlling people's thoughts and opinions. Like this is like propaganda that they're saying the markets are going to go down, and people are believing it, even though it's bots. They're creating tons of bots.
Yeah.
And I think these market makers has to do a lot of these big drill downs, and like this is the opportunity for them to make so much money.
All right,
so this was a great play.
It was a note from Citadel Securities, head of macro strategy, saying they expected the Fed to raise rates that week, and surprise move. It's funny because I think Polymarket put it at like 25%. And so Citadel says, oh, they expect it to happen. This is on the 27th.
Yeah.
Like, okay, so this is right here, and it tanks a little bit more. Maybe
Can we see the history of that on Polymarket to see if it'd be interesting to see if there was a huge divergence there where the market panicked, but the prediction markets didn't. I doubt that's the case, but I'd be curious. I don't know if
this
we
is
can.
the new.
Yeah, can we see history?
I just remember looking at it specifically and being like, it was 25%. Do we need to, no, the API or whatever, no. Okay, let me ask Claude.
Yeah.
What did Polymarket say the chances for rate hike?
And have it do it before and after this report was published.
See if we can dig that out. 27% here, that little thing. Okay, well, let's see what it says though.
Google search of Polymarket Fed rate hike by. I have the graph over here. By, and then that one, first one. Click on the thing itself, on 56%. Then click on graph.
Okay.
That's for September.
Well, yeah, that's for September.
Oh.
That's not. Okay, so let's just see what Claude says, because, Okay, so
I can see this is what I'm talking about. It might spiked right after this.
it was,
So it moved in line with the market. Is what
it had price at roughly 27%. Yeah, baseline through mid-July, it was at 19%, pricing for a 25 basis point hike. It was about 19 to 20% hike for weeks. And then the Citadel Securities note hit July 27th and repriced it. Okay, the probability of no change dropped, 8.9 points, to 73. Okay, so it boosted it a little bit. So that note actually boosted it. This is so like...
It's great because to me it's like, dude, I don't know if anyone really thought the Fed was gonna hike.
Yeah.
Like to me, if I had known this, I would have taken the other end of that, at better odds than before the Citadel.
So it was like 20% going into the Citadel, and then the Citadel note comes out, then it goes to like 27%. Like it just wasn't. It was probably not going to happen, and then Citadel says, "Oh, it's going to happen." I think we need to look at this. I don't think we need to. The note. Okay, so can we get a link to this note? Hopefully, it's not too long.
I'm just looking up stocks as he's talking about.
This is very fishy, in my opinion. Like,
you mean like the Citadel's actions?
Yeah.
Yeah. Well, it's like I said.
We'll never be able to fully prove it, though.
No, we'll never be able to prove it,
Ever.
and it's not technically illegal, to my knowledge.
It's not publicly available. Oh, it was like a privately. Okay. What did they say on CoinDesk's thing about it? Okay. Surprise 25 basis point hike. Oh, yeah. Raise for a 25 basis point hike. But on Wednesday, not in September. Okay. Yeah, they basically explicitly. Yeah, that's
what I was saying. They saw like an opportunity. They were like, "Oh, I wonder if," and then they said, "Push this," and then the whole thing came crashing down. And they're like, "Perfect. It's just a cheap,
like he's
cheap
like
discount for us."
He's struggling, and then if we send it down another 10%, which they did, then here we go.
And for all Citadel knows, like maybe he was just asking for capital to buy more. Like he wasn't in the reds. He didn't have any issues, but.
That report came out the 27th.
Yeah.
Right. So that's interesting. It had zero impact on futures markets. Like if you go to the Fed Watch tool, which actually they had 36% chance of a hike.
Interesting.
Which then, and that was the peak, and then it just absolutely plummeted going into the 28th. And then the day of the meeting, it was only a 2% chance that the futures markets were pricing in.
Nebius also kind of, that got sent down more. I think it was Bloom and Nebius, in large part. Probably IREN too, just all those, kind of smaller, large cap to mid cap type stocks he had in those big positions. And then that's enough to do it. And again, I don't know. Try not to be a conspiracy theorist, but this is so like
it's hard not to be.
Yeah, like a 20% chance, and then they're saying brace for a rate hike Wednesday.
I think that there are like fun conspiracies around this and these actions and everything we just dived into the last 5-10 minutes. I wouldn't put in the conspiracy camp. I think that's just ruthless.
Yeah, you can't. This is just the game.
Yeah.
I think again, it's shades of like lots of debate about what happened with Robinhood, like the phone call or whatever. But yeah, here's the thing: if someone with the prominence or like the connections, like Ashenbrenner sends a note or memo saying or just asking to raise money, that's going to find its way around. Like. Of course, Citadel or some market making firm saw that. Of course they did. Someone there, of course they did. So,
If we want to look into conspiracies, I think we should table this until November when the 13F filings come out for like all the rival hedge funds. We can see if there was like predatory behavior.
I don't know. I don't think you can deduce much from that because
No?
there's just so much goes on from it. But like,
It's challenging. And then a lot of it, like if you look at like somebody like Jane Street, where they're all in-house money, so they don't really have to follow the same reporting rules that other hedge funds have to do.
side note,
So-
Jane Street had a stake in Ashburner's fund. They were actually an investor.
So
They
I guess
did
they
by
wouldn't
the
be
book.
they wouldn't be
They did
hurting
by the book,
themselves, but there's other funds like that
Yeah.
that are all just manage their own billions of dollars. So
Yeah. So I don't know. Bottom line, don't go crazy on leverage. That's what you can take away from all this. Don't go crazy on leverage. If you're going to use leverage, maybe you like long short hedge, kind of like war in some way, and use it smartly. But don't be like levered up on high beta AI bottlenecks. Like it's just the drawdowns on these things are so crazy. Like yes, they go up over time if the thesis holds, but like they're gonna crash 70% multiple times. Like even during the .com boom, Cisco, which is like the big one that had so many massive drawdowns along the way. So before it went super ballistic. So it's like just don't go on high beta leverage. But that's it. That's all you can do. It's not that, it shouldn't be that complicated. It's just don't over-allocate, but again, human emotions are something else. So even if you have a really high IQ or all the vetting, all the credentials in the world, it's like long-term capital management now this. But again, Ashenbrenner is going to be fine, I think, if he decides to just go the fully private route. Or maybe if he does get the public portfolio back, like I'm sure learn some kind of lesson, he still walks away from this rich and still has the following. I mean, there's been far worse blowups, or just, whether in the fund industry or in business, and then they just get funding again, So he will get funding. I mean, if the WeWork guy can get funding again, even the Theranos lady, I think, almost got funding again before she went to prison. Something to having that influential pull. Like they will always throw money at you.
Yeah.
It doesn't matter. So yeah. All right.
Let's move on from Leo.
Yeah. Everyone done with Leo? I mean, this is going to be just a recurring theme for a while. This is going to be the big story for a while. So,
Ashenbrenner will return.
Yeah.
Next.
Lots of memes on this thing. All right, so we can talk about earnings a bit. Just more of the, more of the same. I think I'll just ask it to Mag 7 earnings and reactions and CapEx guidance, etc. I mean,
Maybe we do a little mashup here. Some people have like stuff they were going to bring up in the lightning round.
Yeah,
reported earnings.
real quick.
Yeah.
So yeah, it was a big earnings week, past week or two, and all the Mag 7s reported, and it's kind of more the same. Most of them beat, but of course, most of the stocks tanked with the exception of Meta and Amazon, or no, Microsoft and Amazon. Those two were up big, but there's just lots of uncertainty about all the CapEx spending because they just keep ramping and ramping and ramping the estimates, and you wonder if these companies are well capitalized enough to withstand that. So we can look at, say, Meta, and I think that tanked because unlike Microsoft, they don't have a cloud services business, and it's still kind of in the prove me phase on their new AI. Even though I think we bought it for the portfolio, we did have to take that hit, but now it's come back. But it's with their models and how they can integrate it into the existing ecosystem they have. I think it's probably fine. It's cash cow still. Google also tanked, I think.
That bounced back nicely too, though.
Yeah, everything bounced back kind of. So earnings is just, it's a one day gamble. Who cares? Apple tanked, I think, because they had some one-time gain from the tariffs somehow. So.
That
Is it
and
much
well,
more
they
than much?
expect memory to put pressure on their margins for a while,
Okay.
like for a couple years.
Yeah.
So I don't know. They buy back so many shares that you won't even notice
And
it.
then, Tesla, which is, more startup-y than the others, they really tanked. They haven't really bounced much because, again, financially, they're not as well capitalized. Trying to scale that robo-taxi, but again, kind of a wait and see. But I think they raised their CapEx is like, what, now it's 25 billion expected spend. So for them, that's quite a bit. Microsoft, though, killed it. Kind of the surprise.
They were pretty beaten down going into it.
Microsoft's been a weaker Mag 7 lately, but I think now with all the stuff they have, monetizing it. And then Amazon, that's one I feel like maybe we should have thought about getting into. Yeah. Big beat, everything good there. So it's kind of mixed, but we'll just see how it plays out. Okay. Yeah, Alphabet missed on EPS in Q2, boosting 2026 CapEx by 15 billion, stock plunged 7%. Okay, blah, blah, blah. Yes. Okay. Yeah, Microsoft was good. Okay. Oh, they have an Anthropic stake? I didn't know that. I thought Amazon did, but Microsoft does. Okay, well, that's going to help. Meta, yeah, still just uncertainty. That thing came back. So more of the same. The market's just not fully trusting it, but there's some stuff here and there. So yeah. Any more thoughts on big tech earnings? Is there anything else?
I personally have a kind of a prediction in my end. We have seen a lot of divergence between the returns of the AI infrastructure trades and the hyperscalers, the Mag 7 trades. Those have been really diverging in terms of with the AI infrastructures has been making a lot of returns. Hyperscalers were not doing well. Now the hyperscalers are doing well and the AI infrastructure is going down. I think once the AI actually proves itself that it is making money for them, I think we're going to see a convergence between those two returns for those Mag 7 as well as the AI infrastructures. And just ending up that if they don't spend as much as CapEx in the future, we're probably going to see in the next few quarters, if the hyperscalers don't spend enough CapEx, they're going to be the ones going down instead of going up. Because they're not spending enough, because the AI is able to do so well for these companies that they're not spending enough, they're going to be behind everyone. So I think we're going to see a lot of convergence between those returns.
I mean, that's kind of what the big techs are betting on. That's why they're spending so much.
Right.
They think their value add is going to be much higher. But that whole thesis, again, just like with situational awareness, I do think that will be the case, but it might be a years long type of thing.
Yeah.
And so that doesn't mean we're going to have crazy drawdowns in the meantime.
It's a matter of time.
Yeah.
I think a lot of, I think you should say, it will depend a lot on execution of these models.
Right.
OpenAI, Anthropic, if they're able to produce such great levels of models, they're going to be able to prove that these AIs actually work.
Right. All right.
But
So,
a bit of a contrary take on that would be also the Palantir earnings that happened like 2 hours ago. I was listening to the call and Alex Carr was talking about token maxing and it's like a different take on AI and how it could change how enterprises use it. And we've seen that Palantir has gone up like 3%, and since market close, and they have seen profitability as like never before. They're getting more profitable day by day, and they're focusing on data. The data sovereignty. That's the word. Sovereignty of data. Because these providers like Anthropic and OpenAI, they're using AI. These companies are using them. They're burning down tokens, and they're not able to use the data, which is going to help them in the long run, right? At the end of the day, that's how they analyze and prepare for a better future. And Palantir has like a different stance in which they're helping out these enterprises by providing them data, by providing them a kind of more independence while providing same kind of benefits and services. So that is also a different take that could potentially impact hyperscalers as well, and AI as well. And it's gone up, so I definitely think that a lot of people, agree with that.
Yeah, I mean, okay, just ask Cloud, whoops, lost it. All right, so they beat across the board, seems like, versus expectations. Yes.
Yeah,
Growth
the
rate
guidance too.
still crazy. The guidance, yeah, that was the main thing. 82% growth, pretty crazy. All right, yeah.
I bought it on Friday.
Nice.
All right, easy 20%.
Yep.
Carp with his letter, I mean, this was a little marketing, but still, yeah, okay. Yeah, so, I mean, this thing has been freaking crushed, over how long? Yeah.
Year to date.
Yeah, still down quite a bit after this. 40% down from highs, like, been crushed with software, but then we have the whole defense. Yeah, probably a solid one. I might not even rule out like, hey, well, again, valuation, you can't use traditional valuation for this thingy, but with the growth rates, I don't know. Can't rule out adding this one to the portfolio. More risky, but still. Again, we don't want to turn into Ashenbrenner here, but yeah. All right. Interesting. All right. So there's some other or before we do a lightning round, there's a few ways we can go. Because maybe instead of just all this AI stuff, I mean, okay, so we got the HIMSS thing with BPC 157. We have LeBron going to the Sixers, even though like market, it's just another variation. FIFA tried to sell stakes in the World Cup.
They stopped it.
That got shot down. What do you guys want to talk about among all these things?
LeBron James.
LeBron? Yeah, let's talk LeBron. Let's make the summary a little interesting now. Okay. Just a little bit. All right.
Spell LeBron wrong.
That's fine. I'm testing it.
Let's see. Let's see how cheesesteak stocks are doing. Cheesesteak related stocks are doing.
She knows off the cream cheese.
I was gonna say J Mike.
Now, great.
Something to note, and I remember we looked at this briefly. It was like his next team, and it was supposed to be like the Heat or the Cavs, and it kept like alternating between Heat and Cavs. And then Sixers were like, 10%. They closed at 10%, and then he ends up going to the Sixers. It's like a shock, kind of. So, because we said we would cover it, and then we can do lightning round. Okay.
Well, because we also do the SML thing as well.
Oh, the DUV. Okay, we can. Let's see. Okay.
So they're being sued now by.
But HIMSS is the main play for this because they have a facility that apparently is ready to start making their own versions of this. And this thing was about, compounding, making their own sort of. Okay, so they back compounding access for VPC 157, et cetera, commercially viable. Could create 2.2 billion annually revenue. Okay.
Looking something you thought.
Athletes are already on it because
Yeah.
waiting for months for recovery is just not good for their athletic career. So they're just taking peptides to recover fast as they can, and it's doing wonders for them. So
My thesis really boils down, like if you just really simplify it, is that there's a huge snowball effect that as more people take this, it becomes a requirement, not just something that you do. If everyone starts becoming faster, stronger, better looking, better hair than you, people are getting taller than you, it's a snowball effect. Like at some point you're gonna be like, oh man, like I gotta participate or I'm gonna be just, left on the sideline.
This is totally anecdotal, but the gym I go to, I've noticed over the past few months, you kind of see I swear, most people are on some stuff. This is one of those fancy gyms, but still I'm like, oh, you guys are all on some stuff. I can tell. And then I'm like, I'm not saying, oh, that makes me want to take some stuff too, but I'm like, oh,
Makes you think about
Yeah,
it.
but, you know, I see where that comes from, you know, it's, yeah.
Yeah.
Peer pressure.
And again, yeah, and then wait till all the influencers, there's already influencers.
Yeah, there's already a lot of
Yeah.
people on Instagram and TikTok already advertising it too much.
Yeah.
Although it's regulated more by FDA that you cannot say certain stuff on it, but yeah, there's a lot of influencers I've been seeing.
I mean, it's just gonna become more socially acceptable, and then that's.
And even if it does have, even if it is discovered, it has some drawbacks. If you have, for example, like someone who's morbidly obese with a 20% increased rate of cancer, it might be significantly worth it to do it anyways.
Pros outweigh the cons, you know?
Yeah.
I brought this up before. I've watched interviews of people who started doing like the GLP-1s, and they're like, the journey can get just like pretty terrible just in terms of side effects. But all these people are like, I would do it again. Like, I don't care. Like, they're like, my life is so much better now than it was beforehand that I don't care how terrible it was to get here.
We've already traded our health for convenience with things like smartphones and Bluetooth and like all those EMFs. So this I think this is going to be a big deal personally.
Do you know if Hims is making things other than for, I think primarily don't they sell it for hair loss, or do they sell it for other things?
After like weight loss, GLP-1s, then it's hair loss, I believe. But the thing is that they're really the only guys that are well positioned to take advantage of this peptide explosion, because everyone else, like their closest competitors have all basically said like, there's no point on investing in that until it's like blessed by the government and by the FDA. Whereas Hims has just gone the route of, we're going to be ready for it in the minute that switch gets flipped. We're the first ones, which to me is huge, because like you want to be first to that market. You want to be first to build out like kind of like an ecosystem like Apple has, where it's like, we want you to have a computer, a phone, a tablet, where it's like, we want you to come to us for your hair, you know, your muscle recovery, just everything, like, you know, your weight loss, everything should go through our ecosystem.
So are they a reseller of these things, or like, because they're not doing the actual drug development, right?
I think with the peptides, they'll be part of the manufacturing process as well. So there's like a vertical integration aspect to it.
But they don't do the drug discovery. They primarily somehow do they license it from other companies, or what? Because I can't see how they would be able to do the drug discovery part.
Yeah, so like a good example, like what they were doing, it was compounding. So you know where the FDA kind of relaxed regulation there, but obviously they're closing that loophole back up, which is good for your like Eli Lilly's and your Novo Nordisk, who are making the GLP-1s bad for your compounders like Hims,
right?
Which is why peptides is so crucial to the thesis, because it gives them a new avenue.
Right.
Because sure, they still make money. They partnered with Novo. Novo sells their GLP-1 drugs through their platform.
Right.
So in that process, they're not involved with the research or the manufacturing. But that's a possibility through this angle, through the peptides.
So it sounds like they have to have a licensing agreement with the original drug developer. Then they do the compounding, and then they do the distribution.
Yeah.
Is that what they do? Which, and I noticed they're popular on social media, right? They seem to have really established the presence on social media. So to your point, they're sort of like developing their reputation or their presence on social media.
Yeah.
I do want to add that in terms of like, as you said, in terms of exposure to this rise in peptides and GLP, I do want to say that if you want like a more conservative exposure to this, there is another stock called Western Pharmaceuticals, and what they do is they make the rubber that is used in GLP.
Knows the ticker?
I'm not sure.
What's the ticker?
Sorry.
Vegeron?
Western Pharmaceuticals. Western.
Western. With
Yeah.
a W?
The direction. Yeah. So Western Pharmaceuticals, and right now their stock is going up.
Western Pharmaceuticals?
Yeah, Western Pharmaceuticals.
West Pharmaceutical.
Oh, West.
My bad. So recently what happened in Europe is that the current GLP version that is used was kind of banned by the EU, and they have a different version going on. So all the GLP that were made before and manufactured by the company and already sold are, recalled, and they're going to be a different version, and they're going to use more of these rubbers. So they've already seen like around 5 billion units like pre-order. And with peptides rising, I do see that their sales will go up tremendously.
To circle back on the FDA points, I work in pharma and I know not first-handedly, but pharma or FDA in general, they don't really, it's not the point to really, I guess, amplify patient lives. I guess the point is to have blockbuster drugs.
Maintain supposedly, and they want to, you know, or they just want to look better, whatever, any reason, you know, you want to looks max, whatever it is.
I had a quick
demand, yeah.
Sorry, I had a quick question about this because I don't know why, but I just thought of this. There is a big black market for these things as well. Like, how does that impact this?
I was looking at that last night. It's
Party just to try these out, and try to see what we're.
Alright.
But I think it's very interesting what we're headed into. I think we also gotta be cautious as human beings, what we're putting into our body.
I asked, how do I get a hold of some peptides right now? Just for research purposes, you know?
The gray market, not black market. Why does it say gray market?
Because it's legal for them to be sold. So it's like they're sold as like research chemicals, like you could purchase them and then do like little lab tests with them, stuff like that. So you can buy them legally, but then people just it's for human consumption. Like it's like a little, the only difference is there's a little asterisk that says not for human consumption, and then humans consume it. Yeah. I know a lot of people that have.
It's like meant for a study or some lab.
Yeah.
Just research.
But why can you buy it though? Why would you be able to buy it if it's for lab purposes?
Because people.
That's what humans do.
Labs, that's for research purposes only, not for human consumption.
That's like, this isn't financial advice.
Yeah, this is where you ask Rock. At least Anthropic's answering it. Okay. Oh, they switched me to Opus for this, so, you know. All right,
very common.
Telegram and Discord groups, fantastic. Reddit, yeah. Lots of great vetting, yeah, okay. Lots of trust me bro type stuff, right? All right.
There are a lot of like, you could Google and like get a website that buys it like right now.
Yep.
Oh, yeah. Okay.
Let's do it. Peptides.com.
Peptides.
Yeah.
You should buy the domain.
Yeah, like
there's
a lot of them are-
medical. All right, okay.
See that?
$9, okay.
They're very convincing.
Oh, wait.
Yeah. I'm telling you, there's hundreds.
Yeah, that should not be legal.
So this is just the next supplement market. Maybe.
Wow.
Yeah,
That, yeah,
times 1,000.
yeah, that's
Yeah.
amazing. We think of it in that perspective, yeah, that's
Like,
amazing.
yeah, that looks just like when you go and get vitamin D.
It reminds me kind of what happened
Making a
with
point.
marijuana being so widely legalized. I mean, a lot of people were really, really excited about the marijuana stocks, and then it turns out, well,
Yeah.
there's already a market. It's just not regulated, and then there's less constraints, and they can make money more easily. So that is another question: is like, will the demand be diverted into different suppliers?
Right. Kind of like what we saw with the weed rally, which is still like the whole weed boom is like an ongoing thing, but these small, and again, there were more publicly traded stocks for this, especially on the OTC exchange, but the small players, they never survive, or they're just poorly execute. They're running on some bare bones stuff. Usually who benefits, who wins, as we're talking about, it's the big incumbents. They figure out a way to they have the infrastructure already, and then just in healthcare, anything, pharma, they just already have the resources to get this thing going. HIMSS is not like it's not like a super giant, but it's still established itself enough and they're aggressive enough where I think they'll be a player in this. But yeah, so it's not going to be your small startups, that's for sure. I mean, they'll sell it in the meantime gladly, I'm sure, but yeah.
So just to go back to HIMSS real quick, so I just searched this up real quick. So yeah, they've built the infrastructure to manufacture and formulate their own proprietary peptide therapies. In 2025, they acquired a state-of-the-art peptide manufacturing facility in California with specialized peptide synthesizers. So essentially, like I said, vertically integrating their business.
Yeah.
So I like it.
Yeah.
Bullish on
Like
him
a
still.
lot.
Just gotta ride out again.
What are your thoughts on like entry points? Is today still a good entry point? Or you think-
Well, I was pounding the table back in February.
We were pounding the table like at the peak. You know?
Yeah, I was doing that too, but that's not the highlight.
We were like, I remember right here, I was like, oh yeah, this is gonna break down. You know, if we were Leopold 4x leverage, then we.
So that's about when they had some bad news from the compounding drugs, right? Because the FDA.
So that's when
they got sued by.
They were getting
Novo.
sued by Novo, and Novo cut off their deal with them. And then at the same time, the writing was kind of on the wall that the government was going to start coming down on compounding.
Right.
So all within the span of call it like a quarter, they just got whacked with all the worst possible news. But then, like, so at the start of the year, that's when I was like, you know, I got bullish again because I'm like, all right, this thing's trading super cheap now, like a reasonable valuation. And then next thing you know it, Novo drops the lawsuit because they realize that they're never going to win that probably. And then they reinstate the partnership to get their products back on his platform. So to me, that's, you know, David beating Goliath, right? the $1 billion, you know, small cap or you know, beat. What I don't know what Novo was like $50 billion or something like market cap.
Luckily, it seems Novo
not like Lilly, but
for them, Novo poorly they've had pretty bad execution.
Yeah, they have.
We still have Novo in the
158 billion. So you're talking about at this point probably 10 times larger. At the time,
you know,
maybe almost 20 times larger.
Hit hard too. A lot of healthcare got hit, but yeah. So with HIMSS, again, kind of speculative, a startup, but they do have revenue. They do have aggressive marketing. They have all these angles they're playing. They got the better part of the deal with Novo. They've already been beaten down. You know, I think now slowly, and again, healthcare is not going to move like AI, but I think the regulatory floodgates are open for them. It's just healthcare is such a hard industry to disrupt, and they've been pretty explicit. Like, we want to disrupt. Like, they want to be the next big giant, vertically integrated giant.
Even Amazon,
no one's done it like this before.
Yeah. I mean, to me, they look like an acquisition target in a few years, right? If this continues.
I'm sure they'll get offers for sure. Either way, there's bullish
That'd be a
capital.
good investment.
Yeah.
That's what I'm thinking.
They report earnings on August 10th after the market closed. So based on how risk averse you are, you can use that as a pre or post entry point.
And earnings
if
have
you're looking
been
to build a position.
In recent quarters, they've been kind of mixed. I mean, it's not like they're doing poorly. It's just sometimes they beat, sometimes they miss on the estimates. It's splitting hairs, but the bottom line is they are growing their revenue overall. And despite getting all these curveballs from like the incumbents or from regulators, so it's like they're navigating healthcare about as best as you could expect any startup new player to do it. I don't think anyone's done it to their level, and then they're also, again, this is everyone's saying this, but I do believe it because they're coming from more of the tech angle, and they're like Duolingo, they're like really crazy about AI. They even hired away some people from Robinhood, but they're just very at the forefront of this stuff. The CEO, I really like him, his interviews, and just everything they're doing. I think, again, this is a very long-term play though, and it's speculative, so it's going to be volatile like this, but I think the worst of it for the time being is behind them. So it's a really good one. All right. Should we go into the lightning round?
Let's do it.
Let's do it. All right. Who's got a stock? Let's go.
What's the lightning round, sir?
AMD.
It's like
Basically,
you just toss on the stock.
Well, yeah, why don't we just say what the lightning round is real quick?
Yeah. So for those who aren't familiar, the lightning round, not to steal from Jim Cramer and his lightning round, but it's just a rapid fire thing where someone throws out a stock they're into, and then we just talk about it for a little bit and see if it's like a good one or not a good one. And, we just dive into it. So AMD, let's try to keep the AI infrastructure I know it's the main thing, but We talk about it plenty.
To be fair, Ashenbrunner just gave us some buying opportunities here, so.
Yeah.
Taking the market for us.
AMD, 800 billion market cap. Those ratios are crazy, but the growth rates are also crazy. So it's, again, speculative. Who's dialed into like AMD? Mario, weren't you, I mean, maybe that's more towards like the PCs, but they're chip scaling or, let's see.
Yeah, it used to be more in tune on the consumer side,
Yeah.
but since it's gotten so egregiously expensive, I don't really.
I thought they were supposed to be like because we bought them on the thesis that they would be like the low cost player versus like an NVIDIA. I don't know if that's like totally the thing. The MI 455, yeah. Okay, so that's their CPU, GPU, whatever. Okay. Chiplets and memory, yes. Okay. How they get to a memory configuration, NVIDIA doesn't match. Okay, so they have a memory advantage. Okay.
Yes.
The MI 455X carries 2.25x the memory of the Blackwell 200, B200, and 1.5x that of Vera Rubin. That's the next gen from NVIDIA. Interesting. Okay, so AMD wins on capacity. Trade-off is, okay, the strategic bet. Also, I think if you go with NVIDIA, you're in their ecosystem. AMD gives you optionality. Yeah, everyone sells racks. Okay. All right. So yeah, there's going to be demand. I think the bottom line is there's demand for compute in all forms. So I think AMD just is well positioned for that. I mean, now it's not NVIDIA level, but still just from a growth perspective, where it's at right now, what they could get to. Yeah. All right. Inference, they have a, okay, inference, what does it say? All right. Tokens per dollar. So yeah, it's a cost differentiator. That's still an angle you can play. Yeah. Okay, so yeah, I think business-wise, well-positioned for all this chip scaling. Who has AMD stock? We all kind of have it to a degree, yeah, just along with everything else, but pretty solid. All right, next one.
Butterfly Networks.
Go, and then we'll go, okay, Butterfly.
BFLY.
Yeah, that was the one, they did the thing for the Mid-Journey scanner.
Yeah, earnings call.
And earnings, 2 billion market cap, very speculative.
They have a deal with Mid-Journey AI.
Yeah, that's very polarizing, but you know, there might be something there.
I've been holding it for like a few months now.
Daniel, aren't you kind of in tune with this?
Only from the medical imaging perspective.
Yeah.
I mean, I don't know what else they're doing.
That's all they're doing.
Okay, well.
I mean, I'm not an expert on them at all. I can just tell you that they made an affordable ultrasound sensor that sort of took the established ultrasound market by surprise several years ago. I don't know if they've been able to capitalize on that or not. I wouldn't read too much into the Mid-Journey scanner.
Yeah.
I think that's a lot more hype than it is reality there.
Yeah, I think it's one of those things, I think. I don't know about as an investor, but in terms of like a long-term trade, like just on hype, healthcare stuff, tailwind. I mean, you could still get like a couple year run out of this thing as tailwinds. You look at the size, 2 billion market cap. It's not like they're burning money that badly. EPS isn't that negative. Again, speculation, but could this thing, I mean, it hasn't even touched. So from a trader's perspective, just pure trading perspective, I'm like, well, this thing is showing some momentum, hasn't even touched double digits, mid-cap size. This is like the sweet spot for all this type of like swing momentum stuff on a theme, whether or not the theme actually plays out and becomes true. So I think you got like, yeah, you can get some run on this thing. Now, is this thing worth marrying long-term? Well, no, it's up to you, but I think you can get some tailwind run on this thing for sure. So if we're looking for, you know, hey, let's find something that's going to get some some hype besides like an AI bottleneck. I think possibly Butterfly, but again, you got to know the risk is they could easily take a massive drawdown. And again, this thing is just not even back to its, okay, so they did a SPAC IPO that kind of throws some water on it in terms of like how legit. Not saying all the SPACs are like not legit, but usually there's some execution issues if you IPO. It's just a sign of companies rushing things. So not quite at 2021 levels, but again, just from a recovery momentum pump hype standpoint, yeah, you can blow past the IPO price, that $10 SPAC floor, and get something into the 20s, on this market cap. Yeah, I think there's something there. All right. But again, could go to zero. Who knows? All right. Yeah.
Oh, can you look at OTF? And it's just been dying a slow death. But there's still kind of like a moderately high buy rating from an L.
Blue Owl, is this related to Blue Owl, the
private credit
one?
Yeah.
Like it's not OWL.
Like, why is there still a
Okay.
buy rating from analysts looking at this chart?
Well, for one thing, analysts will slap a buy rating. Chris, you might be able to speak more on this, or you might not be allowed to. I don't know. Analysts will slap a buy rating on everything, Like that's just part of the game. Like, depends on if they have an investment banking arm, they want to, get some services in that. So I don't know if that's the big thing. What stands out to me is it's paying a 13% dividend, which now high dividend doesn't necessarily mean the best. It's not like a sign of like, oh my God, this is like a cash cow. It could mean like, oh, maybe they're required to pay out like a master limited partnership or something, or like a REIT. So they are paying out a large percentage, a large portion of what they make as a dividend. So stock wise, it's definitely going to be a drag just from that alone. I'm just curious, why is OTF separate from what's going on with this? Like what do they do? What's the whole thing? Sometimes these companies will have these arms that are like separately, and they're publicly traded, but there's some other kind of thing. Okay, so business development company externally managed by Blue Owl Technology Credit Advisors, indirect affiliate of Blue Owl Capital. Okay, yeah, externally. And again, I'm not familiar with this particular space, but I know from a lot of energy companies and how they do this, you generally are best off not owning that thing that's like the externally managed thing that's also publicly traded that pays out a monster dividend. It's just those things tend to like go down, don't even offset like what they pay out. It's not really.
Will also pay a high dividend.
I think so. Let's see. So if you're going to do Blue Owl, I think Blue Owl, you just do Blue Owl itself. Okay, 8% dividend. Again, and this has been nuked hard because of the whole credit issue stuff, but it might be one of those things where maybe all the bad news is past. Maybe the credit issues haven't resolved, but again, markets are forward looking. So if you think they can get through it, okay. And dividend doesn't seem like it originally was an 8% dividend. So I don't know, but again, this is not my space. Victor, didn't you know more in this area or not really? Or?
No, I wouldn't say I'm an expert in it, but
Yeah.
I was pretty bearish on private credit at the start of the year.
Yeah.
I just think that the way that they do their accounting, which I can't really explain, but if I find a video that does it well, I'll put it in the Discord. They can basically hide a lot of these losses until they absolutely have to disclose them, which I don't think they've done yet. So, like, maybe the bad news is all over and, market's forward looking, things turn around.
Yeah.
Or maybe there's a bunch of bad news that hasn't been unleashed yet. So I personally am still bearish.
Yeah, anything that is financial, that is like it's like lending or whatever, and it's using leverage to some degree or a high degree, which this kind of is, like, you don't know. It's nearly impossible to value. It's like harder to value than like a Palantir even. It's just like you don't know what is truly at risk and what moves exponentially against you in that thing. Just like with the stocks that blew up in the housing crisis, like you don't know what that risk is in their portfolio, what it is. So it's just either you believe in.
I found
Yeah.
it. So it's called using payment in kind. So basically, when a borrowing company cannot afford its interest payments, the lender can switch the loan structure to payment in kind, which essentially is instead of paying cash, the borrower issues more debt to the lender. So
sounds
could be really bad.
yeah, so it sounds like you're just getting this lifeline extended. But if, let's say you're a software company that your business is absolutely decimated now because of AI, it's like you're never coming back. Like this bubble's just gonna keep growing until one day someone says, we're not giving you more money.
Yeah.
So, and then I think the other thing, well, actually, now I can't share that story. I'll tell you if anyone's around for dinner, I got a story for you.
All right. What else? Lightning round.
Can we talk about Warren Buffett and Berkshire?
Berkshire. All right. Well, he's not running it now, right? He's kind of retired. Berkshire B. Let's look at that. All right. Little breakout here. Momentum breakout, right? Berkshire. Oh, it's value's nice. Do they still have a lot? Yeah, they have a ton of cash.
Yeah.
$204 a share in cash. That's like almost half they're almost like, there's like 40% in cash. What's going on?
And they have been holding cash for a while now.
Yeah. What do they want to do? Let's see. What's their... What are they holding right now? They still got Apple. This is okay. I was like, that's a terrible format. Okay. All right. American Express. They still got American Express. DaVita. That's some healthcare.
Yeah, they're like
Itochu is Japanese stocks. They're
diving more into Japanese stocks.
Okay. Deep value Japanese stocks. So there's this thing. Okay, I'll go into this a little bit, but Japanese stocks have historically, like they've been undervalued for years, with like the nets and everything trading like below cash or whatever. And like I think their government even mandated like that they have to buy back their shares or something in 2023. So it's like you can get some deep value run, like maybe in these things at some point. And this is what David Orr has been positioning for, like for a while. Now, again, if you're playing value, you got to be okay with this like underperforming for a while or just not realizing your thesis for a while, because it's like you're not playing stock momentum or anything like that. It's like straight up, this could take years. But clever. Is this a recent thing?
He started investing in Japanese companies, I think so, May.
yeah,
Okay.
this is a post Warren Buffett thing.
Okay.
Although to be fair, I don't know how involved he still is.
And they don't have any big AI companies in their portfolio, like that's concerning too.
Well, they have Google now, right?
They have Apple.
Yeah, but they're just absolute AI.
Yeah. So
I don't think it's concerning. I think it's much more safer.
yeah, you're not going to end up like Leopold. You're not going to get like something 1,000% returns in a year, but you're not going to freaking
No, like, concerning in a way that is he against AI?
I don't think he's against AI when he has a big chunk of his portfolio is Google. He also participated in the financing that when Google was trying to get bonds for the AI investments.
Yeah.
I don't know. Like it's one of these things. Berkshire hasn't outperformed the market in like forever. They've just been kind of the market. It's something where okay, if you're gonna grow by essentially becoming an ETF, which is what they are now, you know, because with all their holdings, public and private, like at some point you get to a certain size, unless you're like actually innovating or making the thing like pushing the world forward, you're probably just gonna go with the market.
Right.
Like, they are the market. So, like, if you want something a little differentiated from holding SPY or VOO or something that's S&P 500, like, go with Berkshire, I guess. But
What's their
again,
beta?
But you're saying like they are basically moving with the market by not.
so it's its own thing. Yeah. So if you want, yeah, it's its own thing. Like it but again, you're gonna get like several percent per year on average. So if you want
That's
a different look than maybe your S&P 500,
yeah.
I think Berkshire. And again, it's not run by Buffett anymore, and it's not going to get the returns he's historically gotten. Also, got to realize, and I'm not saying this is like luck. No, he's a smart guy, but he really rode that like 1960s. There's a whole boom, like a post World War II, 1950s, 1960s boom that Buffett really realized most of his crazy gains in. And Buffett used to take a lot of risk, actually.
Yeah.
You know, at one point, this was like 60% Geico, which at the time was speculative, you know. And so like now it's so big and it's just so diversified that it is a market. So that is a decent Apple stake. I think they got 20% Apple. So I mean, yeah, it's something. Yeah, and cash, lots of cash.
Yeah.
So, we spoke about risk management. Isn't it kind of set up well for like a downside, like the way that they focus on these quality companies and everything else that kind of gets that point too.
Right. So if you're like if you're bearish on the market, like this is not a bad thing to just hold long. Or if you're just not as, let's say you don't believe in AI as much as other people do, or you're just whatever about it, then yeah, I think that it's fine. It's just going to be another vehicle, but you're going to get like similar to market returns. Maybe not even at this point, I don't know, but it's its own thing. It's an ETF now. All right, getting close to 8, but we can do some more. Anything else? Who's got some?
I got one. BTS. Did I jump from?
BTS?
BTSG.
BTSG.
I brought it up before. It's my healthcare play.
Oh.
But they just had earnings, So they were up 23% year over year in terms of revenue for Q2. Management raised their expectations for the rest of the year. But despite that, they fell 18%. And I think that is mainly due to being priced perfectly. The $73 to $75 top that they were at was essentially where the fair value was at. So they dropped due to profit taking, expectations being higher than what they actually were, and then not necessarily like a breakdown of the business, from my opinion. So I see this as a long-time holder of BTSG as a great buy opportunity. Not that I'm peddling a stock, but more looking at it from a educational lens as what is something like this.
What do they primarily do?
They provide like healthcare, hospice care in hard to reach areas.
Isn't this the Appalachians one?
Yes.
Okay, so yeah, we talked about this a bit. It's more of a play on like demographic shifts going into the 2030s.
Right.
So yeah, they have a lot of like, it's mainly in the Appalachian area, kind of like, or Tennessee, Kentucky, West Virginia type of places, and they own a bunch of like hospice care facilities. Obviously, it's pretty morbid, but like it's a business. And
specifically hospice care or other things?
To put it like under an umbrella, it's like very specific, difficult cases in hard to reach areas.
I see.
That's their expertise.
Yeah.
Yeah. So it's something that is positions. I mean, you're not going to get world-beating returns, obviously, but like in terms of just positioning and how it is, in terms of I don't know if you want to call it a defensive value stock, something like that in healthcare. I think this is, well, it's not that deep value, but
is this an area where it's part of the reason why it came down, possibly due to concerns about cuts in the government budget for this kind of thing? I mean, particularly with the fraud, there's a big focus on fraud right now, and this is an area that's been, accused of having fraud. So is there a fear there?
I didn't really look into that, but I could definitely see that as being part of the reason.
Yeah, that could be like I mean, again, it's certainly long term, that kind of thing is gonna go up, right? It's an aging population, keeping people, extending people's lives requires this kind of care eventually. But it may be in the short term that the government cuts back funding for it substantially.
Yeah, and so actually, looking at this, I mean, the summary, essentially a levered roll-up of home and community-based care for complex populations. So, okay, they're on some, a little bit of leverage, not crazy, but okay. Yeah, so any sort of like headwind, I guess, with that could affect it, but it seems like this earnings miss, or this wasn't like a, okay, thin margins, yeah, so it's just a little bit levered, all right. Okay, they're growing, it's just, probably just versus expectations, it's just a one-time thing, so yeah, it's fine. I think overall, it's probably fine. Just,
I would agree.
You're not, it's kind of, okay, this is like a private equity thing, KKR back 2020, okay, so it's spun out of private equity, okay, so. Yeah, it's just another angle. Anything else?
I mean, AMC went up again because of the Spider-Man movie. It's kind of
AMC.
Yeah.
Is that
last week? So
wow.
What?
Double rally.
An interesting side note on that is apparently because of the Odyssey movie, they've all been extending their IMAX runs. So the theaters are all sold out.
They just had.
I know they're sending it too. Okay.
Yeah.
Is it true
You should
that,
look up the box office.
yeah, is it true that Spider-Man made like all the money that Odyssey made in like 2 weeks in one day or something like that?
Wow.
I don't know, I saw,
I don't think
Honestly, it's not a kid's movie.
Yeah, that's
fair, but that's still an insane stat.
Okay, so
Opening weekend.
932 million worldwide, jeez.
Wow,
it's
insane. I tried to get a seat too.
Yeah, so they broke $1 billion in one weekend, and I think it took the Odyssey like 2 or 3 weeks to do that.
What was the budget?
That's shocking because the Odyssey was already doing phenomenal.
Yeah, it was already like breaking records on its own.
Spider-Man, okay, it's already.
Honestly, it's the first time I've ever seen like 3 a.m. screenings of movies,
Yeah.
and those are sold out too.
Yeah.
It's like, what is happening?
Is it still that guy who's
Tom
Spider?
Holland.
It's still him.
Yeah.
What's his last?
I don't know.
And the guy from the Punisher.
There's some guy.
Yeah.
Okay.
What's his last?
We shouldn't be buying AMC stock. We
Well,
should
actually,
be
he might come and do.
getting together to open up a movie theater, dude. Or we might miss our window.
You see what
I think.
Although we got Dune at the end of the year and the Avengers movie,
Oh,
so
wow.
Yeah, Doomsday at the same time.
this just might be the year for movies.
Yeah.
Hey, remember when I said long IMAX, short AMC pairs trade?
How do we long Tom Holland?
Yeah. What's his next thing?
What's on all 4 of them?
Yeah. Well, let's treat the
Can you
actors
put them
like
monthly?
monthly.
That's crazy.
Or-
Yeah, Tom Holland's gonna make a lot of money this year.
Zendaya too.
That's insane.
There you go. That time to buy was a couple years ago, but and these are just tough businesses in general, but still at $2 billion. I don't know. Brick and mortar, but still, I think there's a need for in-person stuff, and people like going to the movies, so it's not like a dead thing. I don't trust AMC long term because of how they've diluted their shares ridiculously. If you look at this, essentially like a penny stock scam and how they run it, but IMAX seems to have more potential. Do we have okay, so what's the deal with IMAX? I just want to they have a limited number of
Cameras.
their
Theaters that can show it.
Yeah. And is it really worth the experience to go?
Yeah.
Okay.
I think so, yeah.
Yeah.
But there's only
It might not be
handful of
Like a
movies.
bottleneck here.
It might not.
There's only a handful
Yeah,
of
there
movies
is.
though that make that experience worth it.
Yeah.
It has to be a good movie, obviously, but
Yeah.
it is summertime, so extra hype if it's, so.
Because like if you get a year where it's just like a bunch of indie movies or dramas, like you don't have to go to the IMAX to go watch that.
Right.
And also, they don't sell their cameras; they only license them out to productions.
All right. See how it goes. I think we can end there. It's about 8 o'clock. Thank you for coming. You are welcome to stay, eat drinks, the 4th floor afterwards. It's a good time. If not, thanks. See you at the next one.
Anything else, Chris?
I have to get going actually, but I'll stick on for a bit.
Okay, yes.